She was known as the Witch of Wall Street, a name meant to conjure images of a cold, miserly, almost supernatural figure who haunted the financial world of the Gilded Age. But Hetty Green was no witch. She was a master of logic in an arena governed by madness, a paragon of discipline in an era of reckless speculation. While the titans of her time, the Morgans, the Vanderbilts, the Goulds, built empires on debt and grand vision, Hetty Green built a fortune that rivaled theirs on a foundation of two simple, unshakable principles: absolute financial solvency and the courage to act when everyone else was paralyzed by fear. Her strategy was not complex, but its execution required a level of psychological fortitude that few have ever possessed. She did not merely buy market downturns, she waited for utter, complete capitulation. She bought when there was blood in the streets, and in doing so, she turned the greatest financial panics of the 19th and early 20th centuries into her personal instruments of wealth creation. To understand how she turned crashes into fortunes, we must first understand the forging of her unique and uncompromising mind. Henrietta Howland Robinson was born in 1834 in New Bedford, Massachusetts, the heart of the American whaling industry. She was not raised in the drawing rooms of New York society, but in a world of stark, unforgiving economics. Her family were Quakers, a faith that instilled in her the core tenets of her entire life: extreme frugality, a deep-seated aversion to debt, and a profound distrust of frivolity and speculation. Her childhood was not spent with dolls, but with ledgers. From the age of 6, her poor eyesight required her to read the financial pages of the newspaper to her father and grandfather, Gideon Howland. By 13, she was the family bookkeeper. She was not taught finance in theory. She learned it as a practical daily discipline, tracking the profits and losses of whaling voyages, managing accounts, and learning that wealth was something to be preserved with fierce diligence, not flaunted. This upbringing created a mind that was fundamentally different from that of her contemporaries on Wall Street. When she inherited millions from her father and aunt, she did not see it as a license to join the speculative frenzy that defined her era. She saw it as a war chest. She viewed the stock market not as a place of opportunity, but as a den of thieves and fools, driven by emotion and herd mentality. This deep-seated cynicism was not a weakness, it was her single greatest strategic advantage. It insulated her completely from market euphoria. While others saw rising prices as a reason to buy, she saw them as a sign of increasing risk. While others celebrated booms, she quietly liquidated her positions, converting her assets into the instruments she trusted above all others: cash and government bonds. She was preparing for a winter that she knew with absolute certainty would eventually come. Her entire philosophy was built not on predicting the future, but on preparing for the inevitable cycle of human folly. Before we continue, please subscribe and leave a quick comment, even one word. This small action helps the algorithm show this video to more people and tells me these deep dives are worth making. This forged mindset led to the core principle of her operational strategy, a phrase famously attributed to another titan of a different era, but perfectly embodied by Hetty Green. Buy when there is blood in the streets. For her, this was not a clever aphorism. It was a literal, actionable command. Her definition of blood was not a minor market correction of 10 or 20%. It was the moment of absolute systemic panic. When credit markets seized, when established banks failed, when the machinery of Wall Street itself ground to a halt. In these moments, price becomes detached from value. Assets are sold not for what they are worth, but for whatever cash an investor can get. It is in this crucible of fear that true opportunity is born. and Hetty Green was its master. Consider the panic of 1873. The crisis was triggered by the failure of J. Cook and Company, a major bank that was heavily invested in the post-Civil War railroad boom. Its collapse created a domino effect, leading to a series of bank failures and the first ever closure of the New York Stock Exchange, which remained shut for 10 days. Railroad stocks, the tech darlings of their day, collapsed. Fortunes were wiped out. This was the blood Hetty Green was waiting for. While others were ruined by their leveraged positions in speculative railroad stocks, she, with her massive reserves of cash and safe government bonds, became a buyer. She did not speculate on high-flying stocks. Instead, she bought the deeply discounted bonds of the very railroads that were in financial distress, and she lent money on real estate that was being liquidated in the panic. She understood that while stock prices could go to zero, the physical tracks and the land they were on had an intrinsic, enduring value. She was buying the core assets of the American economy for pennies on the dollar from sellers who had no choice but to liquidate. An even more striking example came during the Panic of 1907, also known as the Knickerbocker Crisis. A failed attempt to corner the market on United Copper Company stock triggered a run on the banks associated with the scheme, most notably the Knickerbocker Trust. The panic spread like wildfire, and the entire New York financial system stood on the brink of collapse. The legendary J.P. Morgan famously intervened, locking the city's top bankers in his library until they agreed to pool their resources to save the system. While Morgan was playing the role of savior, Hetty Green was playing the role of the ultimate opportunist. She was one of the few individuals with enough liquidity to make a difference. The city of New York itself was unable to raise money and was facing bankruptcy. City officials came to her hat in hand for a short-term loan of over $1 million. She provided it, securing the loan with the city's most valuable revenue bonds and charging a high rate of interest. She was not merely buying discounted assets. She was acting as the lender of last resort to America's largest city, a position of unparalleled power granted to her by her unwavering discipline during the preceding boom. This was her method. Wait for the moment of maximum distress. Identify the entity with the most valuable assets and the most desperate need for cash, and then dictate her terms. Hetty Green's genius was her intuitive ability to identify the moment of maximum panic. She felt the market's emotional cycle. But what if this timing could be approached not just intuitively, but mathematically? It is here that the work of another legend, William Delbert Gann, offers a fascinating parallel, focusing not on emotion, but on the predictable, recurring cycles of time itself. To answer that question, we're launching William Gann Trading Insights, a dedicated channel designed to be a complete, ground-up resource for studying his methods. It serves serious beginners who want a correct foundation in market structure, and experienced traders looking to add the time dimension to their analysis. We will systematically build a comprehensive end-to-end understanding of his methodology. Find the link in the video description. It is impossible to act as a buyer during a market collapse if you do not possess the one resource that becomes scarcest during a panic: cash. Hetty Green's third and perhaps most critical principle was her absolute obsession with maintaining massive liquidity and a complete aversion to debt. While her contemporaries built their empires on leverage, using borrowed money to amplify their returns during boom times, she viewed debt as a fatal poison. She understood a fundamental truth that others ignored at their peril. Debt makes you fragile. It removes your agency. A leveraged investor is not in control of their own destiny. They are at the mercy of their creditors and the market's violent whims. When a crisis hits,